A very special guest. His name is Darren Woods, and he is the CEO of Exxon Mobil. Darren, good to see you.
Good to be here, Eric. Thank you.
And thank you for being here. I want to start a conversation by asking you what brought you to Singapore, what brought you to this event, the New Economy Forum, that Mike Bloomberg convened, especially if we think about the position that Mike has carved out on climate change, on sustainability, which people don't always equate with a hydrocarbon company like yours.
Well, thanks for having me. It's great to be here. And we thought it was an important opportunity to talk about the important role that energy plays in growing economies and raising people's standards of living, while at the same time addressing climate change and the risk of climate change. People often think the two of those are mutually exclusive.
They do.
Our view is, they go hand in hand. And when people don't realize that technology is going to be absolutely critical to bridging those two things. You can have economic growth, you can have environmental protection, but you got to invest in technology to drive that. We thought this was a great opportunity to have that conversation.
Now, this part of the world is an important part in the Exxon Mobil portfolio, the business that you run. But given that demand is growing faster here in the Asia Pacific than anywhere else in the world, shouldn't it be an even more important part of Exxon's business going forward?
Well, as we look at our business, demand's important, but really it's the balance between demand and supply that determines the opportunity set for us. And so what we tend to look for is obviously want to be in Asia Pacific. If you look at the growth in GDP, a large percentage of it's happening here in the region. If you look at people kind of moving out of poverty into prosperity, moving into the middle class, 90% of the 2.5 billion people that we expect to see move into the middle class through the next 20 years is going to be here in Asia Pacific. So it's an important part of the world for us. And then, but a lot of our markets are global. So we look to supply products from all around the world into this market. LNG is a great example of that. With the growing need for power across the Asian economies, bringing LNG into this market is an important role that we play. And we bring that out of Australia. We bring that out of Papua New Guinea, out of Qatar, a lot of places around the world. And then chemicals is a huge part of the business. As people move up the prosperity ladder.
That's what you do here in Singapore.
We do that. We have a very large facility here, an integrated facility with a refinery, large refinery. In fact, it's our biggest in the world, integrated facility. And we've been investing in that pretty consistently to meet that growing demand, especially products in the chemical markets.
Darren, there's a lot of talk here. Chinese Vice President Wang Qishan spoke about it this morning. There's a lot of talk back home about the tensions between China and the United States. At what point do those tensions have an impact on your business, what you're doing now, your operations, if you will, or perhaps on your investment decisions?
Well, we try to, we find over time that those tensions and you see things move kind of up and down across the world. Our strategy has always been to have a fairly diversified portfolio. And to basically manage the business for the long term. And so we pay a lot of attention to that. We're engaged with the governments talking about the opportunity set that we see in each country and really try to make sure that we're focused on the fundamentals to manage through kind of those ups and downs. We're meeting basic requirements in the countries where they need products that we supply that make their lives better.
Do you not worry about the potential downside? I think, for example, about the joint venture that you announced a few months ago, the petrochemical complex and the LNG terminal in southern China. Things have changed in the months since that agreement was announced.
Well, I think when we went in to have that conversation with the Chinese, we had a pretty good understanding where things were at. It's consistent with where we're at today. That, by the way, is not a JV. It's 100% ExxonMobil venture that we're looking at. So we think there's an opportunity there. There's a growing demand in China. There's an opportunity for us to invest in China and meet that demand locally. And I think the Chinese are very supportive of that.
Do you see any change thus far thanks to sanctions and tariffs and these tensions that we've been talking about, any change in the flow of fuels or products, or do you expect that to happen over time?
Well, you know what happens when you put constraints into the system. First of all, the markets that we deal in are global, and in the world, we'd like to talk about it being round. So if you constrain it at one spot, it'll move to another. And so typically what we see in our markets is disoptimization of the supply chain. So the flows, we're not changing the demand per se, we're just changing where that demand's being supplied
how it's being met, right?
And so that gets moved around. You add extra cost into this. Absolutely. Yeah, I think the tariffs end up putting incentives to re-optimize your supply chains and start moving things around from different places, which adds some additional cost.
You expect to see the Chinese buy more oil from Iran?
I couldn't tell you what the Chinese are going to do, quite frankly.
How does it affect Exxon most directly?
The Iranian...
No, not necessarily just Iran, this whole picture, if you will.
Well, you know, our business, it depends on free trade, and we're a big believer that economies are best served by having open, free, and fair trade. And so I think any time you start to put restrictions on that, it has an impact on our business. We'd like to think that our company is robust to those and competitively positioned versus our competitors. So while there's a disoptimization in that whole supply chain, we feel like we're dealing with that fairly well versus our competition, and that's what we stay focused on.
Darren, given the scope of and reach of Exxon's businesses around the world, we could take a bit of a global tour. I'm going to move on from Asia Pacific and ask you a question about the Gulf. How closely are you monitoring developments in Saudi Arabia specifically, and the Gulf more broadly? And do you worry, if you will, about the potential for some kind of disorderly fallout from the Khashoggi scandal?
Well, you know, we have significant businesses in the Middle East. We've been in Saudi Arabia for many, many years.
90 years, I think.
Very successful business there, and very good relationships with many of the business people we deal with there. And so we've got, I think, a good presence there where we stay plugged in with what's happening in the Middle East. I think, you know, that region has seen its ups and its downs, like every other part of the world. And again, we try to stay diversified, take a high-level perspective on it, make sure that we're meeting the needs of the society more broadly, and just stay focused on that in the long term.
Do you think it's going to relieve some of the pressure on Qatar, where you have some business?
You know, I don't know how you would equate those two things. Frankly, we haven't really tried to get mixed into that business. We kind of see that being more of a government-to-government deal, and so I couldn't tell you how that will manifest itself with respect to that.
Darren, whether it's because of China, whether it's because of Saudi Arabia, Russia, even the rising tide of populism, you know, I'm sure, having heard what some of the people here have been discussing today, there's a lot of concern over geopolitical stability. You've been at Exxon for more than 25 years. How would you characterize the operating environment today relative to everything you've seen since then?
Well, I think, you know, there is always, as you go around, when you have a business like ours that spreads countries all around the world, there are always, you're seeing this tension and movements kind of at different places at different times. And we, again, keep thinking about it in the longer term, how we want to run the business, how we meet the needs of societies around these different countries around the world, and just stay focused on the long term and doing what's right for the country, doing what's right for the people of that country. And I think most of the host countries that we work in appreciate that and value having somebody there who stays stable and thinks about the long term.
Does this feel like a good operating environment?
I think, you know, I wouldn't try to judge it. Our view is you have to be prepared to operate in any environment that you're in. And so laying the foundations, building a business on the fundamentals, it will weather the environments that you find yourself in. So we don't try to second guess where policy is going to go. We try to focus in on what are the fundamentals.
The things you can control.
The fundamentals that underpin this business that are going to make it successful in the long run. Focus on those. Those then basically pay off in the medium term.
Well, of course, any manager should focus on the things you can control, but you have ambitious plans, right? You want to double by 2025. What factors outside your control, if you will, pose the most risk to hitting that objective?
Well, if you look across the three sectors that we participate in, the upstream, the downstream, and chemicals, we have found opportunities in each of those to invest and to grow the business and to double earnings. And so we've got today the richest portfolio of investment opportunities that we've had since the merger between Exxon and Mobil. And so as we're looking at those, of course, it's a fairly large basket of investment opportunities. It's pretty diversified. We're going to find in the upstream, we're dealing with resource owners and partners, and that will have its own ebbs and flows, so that'll move around a little bit. Project development and the engineering, that will kind of ebb and flow. So I think it'll all move around, but when you have a portfolio as large as us, they kind of cancel one another out, and we move along at a pretty ratable basis, and that's what we plan to do.
So to get there, you've got some big projects in development, right? You've got Papua New Guinea, you've got Brazil, you've got Guyana, Mozambique, but most of your production from those is years away. In the meantime, the biggest lever you can pull is in the Permian Basin. It's back in the United States. You've set a target for 750,000 barrels per day, up from some 450,000 today. Can you get there any faster?
You know, what we're focused on doing is the resources there and the opportunity is how do you effectively develop that resource? And so we have been very methodical, and the approach that we've taken in planning out how we produce that resource base and making sure that we do it in the most cost-effective way. Look, the price in the oil markets are going to go up and they're going to come down again. And our view is the business that we build in the Permian, we're building for the long term. It needs to be efficient, low cost, and effective. And so we're making sure that the pace that we go at allows that to happen.
Do you want to be bigger there? And if you could, would you buy something?
We're looking at opportunities all the time. So if we can find something that has some unique value to us above and beyond what the market could extract from it, then that's an opportunity for us to purchase, and we would be interested in doing that.
You would. The name Endeavor keeps coming up. Would you be interested in doing that?
I couldn't talk about any one particular opportunity.
I guess the question is, what appeals to you most? Is it, incremental acquisitions of acreage or perhaps smaller operators? Or if something large came for sale at the right price, would you want that too?
I think, we have the capacity to do probably just about any size opportunity that could come about. So it's really a function of looking at the value that Exxon Mobil can extract.
Sure.
And how we would integrate that into our portfolio. So I wouldn't tell you that size is a particular driver. It's more of the value proposition that we see.
Every deal needs a buyer and a seller. You've also been a seller. You're selling properties in the Gulf. Is there a long-term objective to exit the Gulf because the assets that you have there just aren't as attractive relative to the new stuff you're developing?
Yeah, I would tell you the way we look at divestments, and we've got a portfolio of investment opportunities, as you've mentioned, and I've talked about. We've been filling that portfolio up. When the market prices came off in late 2014, a lot of our competitors stepped back from the market. We kind of leaned into that, found a lot of opportunities, reloaded the portfolio. So we've now got this very attractive portfolio of investments. And what we got to then look at is as you bring in higher valued investments and push out some of those other ones, whether there's an opportunity to monetize that and bring that value forward by selling it. And that's how we tend to look at it. We don't think about it from a geography standpoint or a geology standpoint or a basin standpoint. It's much more around where can we trade that value with somebody who sees it a higher value than we.
Darren, if I look further out, and I've looked at Exxon's charts, you envision transportation demand for fuel continuing to grow even beyond 2040.
That's right.
The question keeps coming up. What if electric vehicles turn out, get taken up at a much faster rate than anybody's expecting? Because there's even a law, right, in the world of technology to describe it. It's called Amara's Law. We tend to underestimate the effect of technology in the short run, overestimate and underestimate over the long run. Do you incorporate that into your thinking?
Absolutely. We do an energy outlook where we try to do our best guess as objectively as we can as to what the future holds and what demand looks like. And we make assumptions around policy and technology evolution and try to build all that in. Then we do sensitivity analysis. So on electric vehicles, there's a lot of discussion about what the penetration rate for that would be. We kind of stepped back and said, let's assume that by 2025, every new vehicle in the world sold is electric, so that by 2040, the entire light-duty vehicle fleet is electric. What's the implication on oil demand for the world? And if you look at that projection, all light-duty vehicles are electric. The demand in 2040 for oil is about what it was in 2013. What people miss is the demand in transportation is driven primarily by heavy-duty commercial transportation, which is driven by economic growth. And today, there's not a good substitute for the energy-dense liquid
the energy
fuels that we
density
sell.
that you get in a truck or
So that's what's driving
train.
the demand for oil and the growth for oil is commercial vehicles and chemical.
By the way, do you think that's a realistic projection that light vehicles are going to end up being all EV?
No, I don't. And we didn't do that because our projection and what we think is realistic is in our energy outlook. But we got hung up. People get hung up in debating the penetration rate. That's not the debate to be having. That's not the discussion to have. So let's just take that off the table. We'll assume it. I'll give you all that, and let's talk about the rest of the business. Irrespective
of how, what the uptake is on EVs, I'm curious to know from the perspective of the CEO at Exxon, what do you think of what Elon Musk has done at Tesla?
I think Elon Musk is a very creative, innovative individual.
Well, we'll leave it at that. Darren, I want to thank you very much for joining us here at the New Economy Forum.
Yeah, thank you very much.
A real pleasure.